Good afternoon. What's up, everyone? Happy Saturday. Hello? Is this working? Yeah, this is working. Okay, cool. How's everyone doing? I feel like we probably are gonna have to talk about a lot of things today. Not your dad. Fucking orphan Dans. Good afternoon, everybody. What's up? Afternoon. I'm mega hungover. Do you want me to chew some food for you, cool daddy? I've got cashews. Boy, we in trouble. We might be. Not like GameStop, but some other things aren't looking so hot. If you want to be your dad, who will? I don't know. Probably no one. No one wants to be your dad. All right, cool, daddy. Just remember that you asked for it. Ugh. How's everyone's Saturday? It's nice having the markets closed. I woke up at today at like 9:45. I slept for so many hours, like 6 hours. Multi-day, multi-million dollars. Can you explain SPXS again? Fuck you, Guevara. So, what's the first thing I should start with? Which current Reddit drama do you guys want addressed the most? I wouldn't say I slept well, but I slept, which is a huge change. I'm woken up by your notification. Sorry. You want to start with O.O.2? Did people start hating on me again? Not yet, but I haven't come out with any DD yet. It'll come. So far, it's been a pretty quiet week for the YouTube, my daily for everything. It's been a very quiet week. People are very bothered with other stuff and Creand and things like that. Wait, there's Reddit drama? Of course there is. You have missed a bunch of these streams, Cool Daddy. Morning, Seacraft. So let me start with O.O.2. So O.O.2 is possibly going to be filed on Monday. It changes the liquidity checks from once a month to every day, which probably means that the T plus 21 or T plus 35 or T plus X cycles that, don't really line up to the dates that they're supposed to are going to get tossed out the window. Any critique of recent DDs that you want to share? Some guy posted a DD about death crosses that I got a shitload of like messages about overnight. I guess I'll probably dive into that. But back to O.O.2. So it's NS. Oh, I didn't turn on Epic Pen yet. How am I supposed to draw with my crayons for you guys if I don't have this turned on? Fuck you, Epic Pen. Do your job. There we go. All right, cool. So NSCC-002. This may go into effect on Monday. It's daily liquidity checks. Implements versus current monthly. So what does this mean for us? Oh, don't forget, I guess you guys don't need to tag me. There's not that many people in here. This could take up to 10 days to implement from the day of filing. So this might be filed on Monday, but they have 10 days to enact it. So we may not see any effect from this next week. We may not see any effect from this the week after that, right? So everything to do with the market is done in trading days. So like even T+2 is T+2 trading days. I see people constantly miscounting this. It drives me fucking nuts. Everything's in trading days. If there's a holiday or like the weekend counts as one day. This applies to theta and options as well. But basically, if this gets implemented, we could see margin calls as hedge funds are unable to make a daily liquidity check, whereas they were able to make a monthly one. So it kind of puts a lot of pressure on the hedge funds. I think overall, it's a beneficial rule for us. We'll see how it's enforced. The NSCC, another self-regulatory agency like SRO, so no guarantees that anything will come of this. But I mean, beneficial rules, I guess, are beneficial. All right, next thing. Reddit drama question mark. Always, Alethea. Any critique? Oh, so the recent DD that I saw that was like that got spammed to me was this guy wrote about death crosses, but he's looking at them on the 1 hour, which probably isn't bad. So this is a death cross. This is your 50-day moving average. And this is your 200 MA. Okay. So what happens in a death cross is the 50-day moving average dips below the 200-day moving average. And this has signaled every major market crash pretty much since 2000 or since like 1929. Except for I don't think it signaled the .com bubble. And it didn't signal the flash crash in it was like the late 80s. So there were two big crashes that it didn't signal. So technically, anytime any low moving average crosses the high moving average, it's a death cross. A lot of people are saying that it has to be on a certain time scale. There's a lot of like conjecture on Reddit, especially on the post. But he is correct. This is a death cross. It's a death cross on the 1 hour. Obviously, not as reliable as greater time frames. These are prone to false signals. The MACD on the daily for the SPY is showing a crossover event to the bear side here. But that can just signal a correction, right? Like these can bounce. And on the daily also, we're still above the ongoing trend line, right? And so there's probably a better correction trend line that can be drawn here as well. It would be like from this correction back here through today. Is that it? There we go. And so as you can see, we've fallen in on the daily as well as the 4-hour. If we back out to the 4-hour, we're pretty deep into that correction zone. If it goes below this on Monday, that's a crash signal. Whether it be a flash crash or whatever, there's a very good chance that we see a market crash, as the Fed came out and, kind of fudged the interest or the inflation a little bit to make things sound good. But it's really obvious when you look at, the inflation that European countries are reporting, and America, I would say, was hit harder by COVID because of our slow action than even some of the European countries were. And although they're still struggling more with it due to the vaccination rollouts, like our economic recovery is probably going to be slower. And they're reporting higher inflation than we are. Yeah, I mean, I see a pretty massive correction, at least correction continuing, probably or possibly a flash crash. I will be buying more short positions Monday morning, like right at market open. I saw there was drama. It dipped out. It was interesting at first. Now I'm bored of the drama. That's fair. It brings with it 801 as well, right? I believe so. Yeah, I believe they're tied. Yep. So up to July 1st. Happy Saturday, Johnny Diamond Hands. Is that where the market tanked at end of yesterday, selling assets to cover their margin on Monday? Probably not. No, I think that the market tank doesn't have anything to do with GameStop, or it could have something to do with over leverage, but like over leverage because of inflation, right? I think reported inflation versus like what the Fed's reporting versus what the inflation that the market is seeing is very, it's a very wide range. And so I think people are panicking a bit, and panic leads to market crashes far more often than just bad news. I didn't want to pay the extra day, Guevara. I mean, if I buy SPXS, I'm gonna buy it way out of the money anyway, so it's not gonna be too big of a deal for me. But I have like 6 SQQQs that are gonna roll over into next Friday. Or are into next Friday. These are all expired, the rest of them, but I'll probably be getting more TTT, which is short the bond, the 10-20 year bond market, and then I'll probably be picking up some more hey Starlight, picking up some more SPXS on Monday, and those are like a month out, I think. So those will be like the longer crash play or correction play. Yeah, no problem, guys. Daily liquidity check, roll a d20. Probably. So they give the assets back to the Fed. Does that mean almost instant margin call? Unless they can make up those assets by end of day or pull them from somewhere else. Yeah. The banks are all the banks, all the hedge funds right now are super fucking over leveraged. They've been just getting away with it for probably about a year now. It's gonna bite them in the ass, especially like they're banking, like all their bets are on like a hard bull market run, right? And like if that dips and corrects, they can't cover this margin, and that's gonna cause a margin call. No 06 allow them to implement rules immediately. Yes, but that doesn't mean they have to, right? You have to remember these are self-regulating organizations, right? So they have no interest in affecting themselves negatively or their members. That's fair, Guevara. Yeah, I can't believe SPXS switched to monthly. That kind of pisses me off because it's always such a short-term play that I hate to like have to buy month contracts on it, but I'm gonna buy them so far out of the money it doesn't matter. I guess at least you don't have to think about them as much, or like you don't have to pay such close attention. But now they're just more expensive, which is kind of stinky. Accidentally bought October. uh, yeah. I mean, when they're up, make sure that you pay attention to them. Especially if they go up. I think they were betting on increased productivity. I think they were betting on a better labor market. But no one's going to go back to their fucking $7 an hour job when they're getting, $600 a week on unemployment. A lot of employers are rising to meet that pay demand. But it could take time. Some are going to be very stubborn. They don't want, $12 or $15 an hour to be the new norm, even though it definitely should be. I don't know how the fuck you're like a couple working full time could live off $15 an hour. And even the presumption that you have a couple working to the same end, right? Buy to open might be the play. Yeah, that's what I'm gonna do. Dittos, yes. It's baffling that the largest banks deny signs of the crash. Do you think it's because they're confident they'll always be bailed out? It's not only that, right? It pays, denial pays in these situations. Like, this is something that probably doesn't get addressed enough. Denial buys time. It sows confusion. And these things slow down panic, which gives banks time to position themselves better for the bear market shift. And so that's why they deny. That's why it's not like they're not coming out and telling everyone the truth. It's because they're trying to slow shit down so they can reposition and better absorb the crash or the correction, whatever it may be. That just says days. Pays. What's a P? Pays. Why Fidelity is so comfortable with low interest. GME is bringing them lots of accounts. They know they can't stop MOASS, but no rush. Yeah, probably. I mean, Fidelity's definitely doing very well out of the large brokerage houses. Yep, it's going to crash probably very similarly to '08. So expect several months of bear market. I mean, I'm pretty sure the bottom's going to fall out from under the housing market. I'm thinking that the like the tie-in with that, like you see all these like KB and BlackRock are like running around and buying up homes, right? At like 1.5x market, right? And I'm trying to figure out why they would do this, right? You also have some like larger like Chinese developers doing this. And I don't know, I need to do some more digging on it, but I think that there's a possibility that in some of the COVID literature, they have protections about from default. Either from the default or from toxic assets. I don't think they're buying them up as rentals, right? Because it's still like like 15 years till they can make their money back if they turn them all into rentals, right? And like I don't think they're playing that long of a term play on this. Like it's too much capital expenditure. And then if the like they must know that the value is going to drop out on the home prices. So I don't know. I'm still trying to figure that out. I don't really have something that ties it all together, but those are kind of like the bullet points I'm looking at, and then I'm trying to figure out where they're getting the money to do that. Because like no investor is going to agree to them going out and fucking spending that kind of money to buy houses unless there's a safety net of some sort. Is there something similar to the SPXS inverse to the Dow? Yeah, there is. I think it's like SDOW. This one. It's possibly options. Is this one with leverage? Yeah, this is SDOW. SDOW. I'll probably be buying some of that also. I'm gonna try to be short. My plan on Monday is to be short the 1020 Treasury. The S&P, the Dow, and NASDAQ. And also junk bonds. So I'm going to be short these on Monday. I'll be buying options across that range leading into this week. This is I should probably give you guys the tickers. This is TTT. This is SPXS. This is SDOW. This is SQQQ. And this is JNK. These are puts. Yeah, wages are too low for people to want to go to work. And then if the bottom falls out of the market, they're going to have to probably formulate yet another COVID relief plan. So in order to re-stimulate the economy, they're going to have to print even more money, which is going to then in turn increase inflation. The market could be in for a crazy year, possibly, as the inflation from last year starts to become realized and new inflationary measures are put into place. Interest definitely needs to go way up. Or not interest, yeah, interest. I find it safer way of playing it besides IV is super low right now because you're a good risk range. Yeah, weekly could be cheaper in a fun short play. Yeah, I agree. I mean, yeah, it's safer to play the monthlies, but it's kind of like not what SPXS is about. Yeah, they usually, yeah, Fidelity is usually pretty conservative with leverage. I work for $15 an hour, but I've got a good health plan. That helps. Yeah, it just depends where you live, Smox. Some places the average is about 14, 15. I mean, like where I'm at right now, the average is about $18 to $20 an hour. But I mean, the cost of living is also, 4 times higher than most other places in the country. But you get to some states, and yeah, they're on federal minimum wage, it's like $7.25 an hour. Yeah, Guevara, I know. Another glorious day ignoring my family in the morning. Am I changing any of my long-term positions? I mean, uh, my biggest long-term position I own is probably UWMC. Um, I sold, so I sold what SPY? I had SPY. I sold what I had on the last like run up. So it was like, I have to go back to the SPY. Hold on. It's like right around here. That was all the SPY I had. I only had like 50 shares, and then UWMC I have a lot of, but it's got a good dividend, and then also additionally, I think they'll do well uh, in a post-crash economy. Uh, I don't think they have a lot of like refi, so I think that might benefit them. But we'll see. I mean, mostly I just own that stock for the dividend. I guess they might stop paying it. If they do, I'll sell it. But my cost basis on it was like $7 something a share. So even with that, I'm up, $2.50 a share, which is great. Um, any other long positions I'm scared of? Got rid of my Bitcoin a while ago. I still have Doge. That's just going down. I should have sold the Doge, but I don't care. I bought it for $10. What else? I think that's it. GME. I mean, GME is really the only long position I'm holding that matters. But I'm not super worried about GME. And if we really if GME got really dragged down by a market crash, I would just use that opportunity to roll my calls, my like in the money calls, and buy more stock or buy more in the money calls, depending on how low we dipped. You're changing any of your long-term position? No, yeah. I mean, I don't really have that much long. You know, I have O, which yeah would suffer, but I don't want to get rid of it. I bought it pretty cheap. I would probably buy more O if the market went down enough. I'd probably maybe also buy like JP, like Chase or Citigroup if those dropped low enough. There's some things that I like. I would buy the dip in the market, but like I don't think I don't think I'd get rid of any of the holdings I have. So like I'd try to like average O down if the housing market really suffered. The compounding dividends on REITs are insane. Like it's just like if you buy it in your 20s, by your 60s, it could like fund your retirement. Real estate will probably grow with inflation, so they keep their assets in something tangible. Yeah. I still can't see paying like inflated dollars for inflated real estate without some kind of safety net. It could be a hedge against hyperinflation. But I mean, not really. Yeah, the odds for a crash are pretty high right now. Yep. I've seen the market dip below like dip below and recover. I think it did it back in the like tech correction earlier this year. But at that time we got good news from the Fed and that propped it up. Also the infrastructure plan came through and that's kind of, I think it would have crashed earlier this year had that infrastructure, like that $3 trillion infrastructure plan that Biden put out, not gone through. We probably would have had a crash earlier this year. Starlight say. I think a crash is very likely, not imminent, but likely. But I mean, you can always take like the Warren Buffett approach to market crashes and corrections, right? And just hold. Like if you have like 401ks or like I don't know, like long-term investment vehicles. Like you can just hold. It always comes back, right? Like you may not have a good year, but I'm like almost entirely liquid, so I have to hedge against the inflation by shorting the market. If they're protected, then they can prop up and advance the market. Sounds like another play from the short the entire U.S. economy playbook. Defer taxes in certain real estate, so if they take Citadel's balance sheet, they can make bank and offset the new massive tax liability. Possibly. But that doesn't explain why other entities are doing it, right? Bear markets are... I don't know if I've ever experienced a real one in my time of trading. Like, I've had periods of bear market, but like very short and then back to bull markets. I was more successful in bear markets than I've been in bull markets. But maybe that's just like my negative outlook. I'm better at identifying the flaws than the positives. Or I don't weigh the positives as heavily. That could just be like psychology. Because it would have pushed any at the money announcements from GME, right? What expiry for the options? I'll just be buying the cheapest ones. I'd rather lose the premiums and just keep rolling than attempt to like profit on the individual options. Do you think $50 SPXS calls would be too far out of the money to buy? No. I mean, if there's a crash, no. Because they're super cheap. Like, let's see. Let's look at the last crash and look at SPXX, right? So the last actual crash would have been in March of 2020. And so it went from $50 to... So, no. Where's it? There it is. So it went from 113 up to 288.50. So like significantly over 100% returns. So right now it's trading at like 26. You can see it hit like, I don't know. I think if a crash occurs now, it'll be greater than last March. But this could run to like $60, maybe 70. So 50 is probably not too far out of the money if a crash occurs. If a crash doesn't occur and it's just a correction, like you might make some money off volatility, but that would be about it. I'll probably be looking in like the 30 to 35 range, I think. Let's see. 55 for July 16th. These are about 10, 50 and 55 are about $10. But I'd probably be looking at like 30 to 30, probably around 35 actually, based on cost. Crash Heinz. Crash Heinz is the inflation play. Grocery stores, food retailers, or manufacturers always do booze. Like Coors is probably a really good bet. Although they're up a lot this year already. My 2 Kraft Heinz shares. Companies like Kroger. I don't know what other big. The last time I was scared of inflation, I think Well, I haven't been since I was trading, but the last time I like looked into like what I would have traded during inflation, Kroger was a big one. Biden doesn't care about. I mean, he definitely cares about inflation. There's no avoiding what happened. Like, I don't care what side of the political spectrum you're on. The we would have had to move to like austerity measures if they didn't print the money that they did for the COVID relief funds. Do I think they should have given, fucking 90% of that to corporations? Absolutely not. But what are you going to do? Yeah, processed foods are recession proof generally. Cheap to manufacture, they can manufacture them in large quantities. The cost basis is already so unbelievably low that, like, even with inflation, they don't really change in price. Grocery retailers are good because inflation is not part of their profit model. All retailers are actually good because inflation isn't part of their profit model. Their profit margin remains the same with inflation or without, for any necessary goods. People stop going out to eat. Yeah, that's always a big one. Are you knowledgeable on the new infrastructure plan? People seem pretty sold on the idea it would create long-lasting jobs, but I don't believe it. I mean, Biden. It appears that Biden is trying. I don't know. His ability in this in the economic regard is limited just because of the way our government's a lot different than it was, pre World War II or after, you know, in the Great Depression. But he's trying to like pull an FDR. It looks like what FDR did with like the Tennessee Valley Authority, and his like New Deal package, which all of you guys I'm sure learned about in history class, maybe not in other countries, but essentially it's this massive economic package that was designed to like spur the economy by providing middle class jobs to large swaths of Americans. The infrastructure plan it's similarly constructed to that, but lobbying and stuff like that has changed the political landscape since almost 100 years ago significantly, and so those goals aren't as easily accomplished anymore, and so I don't think it's going to be as effective. But overall, I mean, yeah, America's infrastructure is in desperate need of updating. Given how rich we are as a country, it should already be up to date, right? It's just that we tend to put our money into other things that maybe we don't necessarily need to do. But it makes sense. Like if you're expecting a large economic downturn, um, you want to put things like that in place as soon as possible so that they can aid in the recovery. So while like the infrastructure plan isn't fully rolled out, if we do have a big economic downturn, it's definitely going to aid in the recovery. You'd buy the stock in those, not options. Yeah, like if I was going to hold stock through an inflated economy, I would be holding things like Kraft Heinz, Coors, Kroger. I'm not going to because I'm not an investor, I'm a trader, which does protect me against some things like a market crash. but hurts me in other ways like inflation. Um, but yeah, I'm probably not gonna hold. I mean, I've got 2 shares of Kraft Heinz here. I'll hold those. But yeah, I'm probably not gonna like hold a bunch of stock through the depressed economy if we have one. Don't forget, we can still bounce off that resistance line on the SPY, and the economy could float above it. Like this is, we're not necessarily in a crash, but I have to expect one. Like the way my finances are set up, I have to play a crash. Like that doesn't mean you necessarily do. I mean, you could buy options, but you want to buy leaps, like really long-term ones, which are very expensive. Silver is the hedge against inflation? Not at all. The price of gold and precious metals has been controlled by, like, suppressed and controlled by banks for so long that, like, those aren't, like, really good recession plays anymore. It could be that we see a massive amount of value move into crypto, because the inflation isn't like just the US, right? It's global. Several of the world's like top economies are struggling with COVID. Some still, right? Like Brazil, India. These countries still have massive coronavirus issues going on. Um, so if we have global inflation, we could see lots of value move into crypto. So like, and think like undervalued cryptocurrencies like Ethereum and Dogecoin rather than Bitcoin. Bitcoin's very hard to transact with, and people are going to look for stores of value that are easy to transact with. So maybe like Litecoin. Um, my crypto market knowledge is not as up to date as it should be, but that could be something we see happen, especially as the wealthy try to protect their liquid assets. Yeah, it seems to be. I mean, I know in my state, like through the like state like newsletter I get in the email, like a bunch of infrastructure jobs have come up, and they also do pretty well paying, decent like middle class income jobs. And those are through that program. They're funded by that infrastructure program. Yeah, they take decades. If you buy options, make sure they are far enough out so you don't get stuck holding the bag if the market makes a correction upwards instead. Yeah. Yep. 2008 was 13 years ago, and I'm not sure that we're entirely out of the economic depression that caused, right? Yeah, if GME does not have volume, it will be dragged around by the market. But if you notice, GME doesn't get dragged very hard by the market. So like we saw the market tank a few times yesterday, right? And we just kind of saw GME do this. Like it just kind of drifted downward. That's kind of what you could expect. And in the bigger market sell-offs that we saw this week, we actually saw GME spike as algorithms moved on the negative beta. So it's hard to say what'll happen to GME, but I don't think it'll drop a lot, even in the event of a market crash. People do need to hold. Um, this may be a more important time to hold than MOASS itself. Like I mean, you guys know, I think MOASS is gonna reach whatever number it's gonna reach, regardless of paper handing and so on and so forth, as I feel like there are enough shares locked up that it will peak at its potential maximum no matter what. But instances like this where the stock price is being dragged down by another factor and people paper hand, these are times, and maybe it's that the hedge funds have known all along that a market crash was imminent, and that's why they're kicking the can down the road. Like if GME, like if there was a full out market crash, right? Like Black Friday levels of market crash, the stock market just goes belly up and all the shit hits the fan. Are people going to be able to hold GME if it drops to like $20 a share? Now, if they do, the hedges can't cover, right? But it's going to be like if that happened, that's a potential, right? And like that's the point at which holding will matter more than anything, because it'll be about not releasing those shares. And for the people who can, buying the dip. But I don't know if like that's a very extreme situation and unlikely, but it's probably something we should talk about. No, none of this is financial advice. And I can tell you guys what plays I'm making. They may not be the best plays for you. I mean, I could use that dollar for something. I think the market's going to continue to slip a bit. I have a $33 call on the SPXX. But I guess I should load up a few more. It's if you're expecting something, yeah. Everything's pointing to it, so. But what makes you think this correction would be worse than March technicals or fundamentals? I think like the technical data points are really, really rearing their heads this time, Duke. We know the market is pretty assured at this point that the Fed is full of shit in regards to the inflation numbers. We have high demand because of all the money that got pumped into the economy, but the supply is still low because global shutdowns for an entire year have disrupted the supply chain. So there's issues with that. The commodities market is already grossly inflated, and that's just gonna bleed over, right? I wish Publix was public. I'm skeptical about how many it's going to be put to work and the return on investment. I mean, I haven't super read into it, Sean Kingsdan, but like, it does appear that like the 10-year projected growth rate from the infrastructure plan, like has a good ROI. I could probably read into the data more, but it's quite a long document. So, I mean, from what I've seen, though, it looks promising. I think the outward pressures on the like America reforming its middle class are too strong for it to happen with such a small measure. But it's definitely a good step in that direction. This plan is good. 1800s, early 1900s, monopolies. I think we can change the landscape. Yeah, we could. I mean, like, but it requires like the people to really stand up, not only unify, right, which is like a huge issue, right, as we're so divided, and I think largely intentionally, but to unify on that front, you know, of breaking down these massive tech monopolies and redistributing that wealth back into the system. And like we were able to do that with the robber barons and towards the end of the Industrial Revolution. But you know, we were the workers at the time, the lower and middle class were very unified in that cause. Now it's shaky. It's hard. You're asking like hundreds of millions of people to set aside their political system for the greater good, and that's a big ask, especially with social media and everything getting so conflagrated. Cardano is already integrating with some African economies. That's interesting, but I don't know how much that helps Cardano. Integrating with like highly volatile third world economies may not always be such a good thing, but yeah, it's a possibility. Like that, you know, we start to see a rise of cryptocurrency and DeFi. Let me make sure I heard that. Leaps, aka very far future options, are expensive to buy up front, but are protective against. Can you go into that more? So they protect your risk in the underlying stock. So it's very similar to owning the 100 shares. Like the cost you pay is very close or more than in some cases owning the underlying. But you have greater protection against moves in the underlying with a leap because you have the value of the contract, right? So you have the theta priced into that, and that can protect you a little bit from shorter term moves on the stock. And that's for in the money leaps. You get out of the money leaps, and you have IV can protect you, but to less of an extent. It has to do with the pricing of the contract is what protects you, because it's slightly removed from the pricing of the underlying. Thank you, Hand Banan. What's your pre-prediction for the coming week? Well, I still have to write my due diligence for this week, but this week's going to be interesting. We have the Russell rebalance. We have some pretty crazy market factors occurring. Still a possible announcement of the share completion at some point. I figure if they finished, I was kind of looking at it. If we go out to the 4-hour, it's possible that this was the majority sell-off, and then this continued the sell-off. I think this was just a nothing day. This was just the market, but I think this was maybe the recovery from that sell-off as we like reapproached almost like we almost, I think we hit 230 here. So I think the sell-off might have ended here, which means that Monday would be the soonest. I thought that this bounce was the sell-off ending, but then we had some like, I guess we had kind of a sharp decline there actually. Hold on. Zoom in on this. So, yeah, I don't know. It's hard to say because this may be a little too steep. I might have to go to a shorter time scale. 15-minute. See, so like this looks like institutional selling a little bit. And then this looks like shorting, right? Like we like before market close yesterday, there was definitely a short attack. Thursday, So I think right here was probably the end. This right here might have been the last little bit of selling, and then this was probably, or at least maybe when Jeffrey started telling people they had no more shares. And so Friday, Monday, so Tuesday aftermarket at the latest, I think currently. They could have held some though, and then they could delay the announcement. I don't know. There's a lot of variables there that it's hard to figure out. Like that action we saw Thursday and Friday of last week, that was definitely institutional sell off. I don't think it was like ETFs, because those shares would have had to have been recalled first. Although, oh, that's another thing this week for the Russell 2000 indexes that are selling their positions, we might see a lot of share recalls. I think the price. See, like, so if the market crashes and GME makes the announcement, it may just protect us from the market crash. It may just float us, like, kind of lock the price in place while the market goes down, and GME just stabilizes. But generally speaking, and under normal circumstances, if they announce that price like up at 240 and we're trading here, we'll move up into that price range. Sunk cost fallacy plus strong thesis equals advantage. Yeah. When you get to it, I want to hear more on leaps and what and how they're protective against downturns. I didn't say they're protective against downturns. They're protective against smaller moves of the underlying, which I think I explained. Yeah, unionisms suffered, but I mean, you could still like talk to a lot of like working class Americans, and they're very against unions because it's like something, yeah, it's like a line they've been fed, like, oh, that's socialism. But I don't know. I don't know how bad it has to get before people jump on board with that, right? Yeah, education's a problem. But these are like the fundamental ways in which a like upper class suppresses the lower classes, right? If they don't understand the system, they can't affect change in it well. That really does get into more of the political spectrum that I'm interested in. 64.5% short volume yesterday. That's pretty high. Yeah, that's probably the highest. So I would say yesterday we were looking at like shorting, like definitely, especially right before close, where we had most of our volume for the day, ironically, and mostly just getting dragged around by the market. But yeah, oh, I'm all caught up. Look at that. Does the Rebalance have to be completed this week? I thought it was read that it started Friday and after hours. I'm not actually sure how the closing of it works. The full rebalancing is completed by the 27th, I believe. 28th. Yeah. So if anybody ever wondered like why the shorts haven't covered, it's because they're still fucking shorting the stock. Any feasible way to figure out if they've covered those shorts at some point, or impossible because it's gone up and down in price sense? I mean, they haven't directly shorted. I don't think they've shorted the index directly. I think they've shorted the ETFs. Yeah, I don't know if that was accurate, Renzer. I think that was just like a down day for the Russell 2000. Like, I don't think it was shorting. There's zero proof of that in the DD that I think you're referencing. Johnny Diamond Hands, I see it apply to me. Not sure why I didn't show up on the list. Yeah, I don't think they're shorting an index to target a stock. That'd just be stupid. Like GME wasn't even weighted very heavily on the Russell 2000. And it's not like they have a problem getting shares to short, right? Like if they just want to directly short the stock, and that's going to have the biggest effect. Yeah, the market tanking can still be a boon to GME due to the margin requirements slimming down as the rest of their assets devalue. Yep. Yeah, this could be a really crazy week. We'll see how it plays out, but like we're definitely approaching what I've explained in the past as a higher probability period, rapidly approaching it. I think higher probability period for MOASS to occur. I don't know. Like hedge funds, like they don't really care if they fail for the most part. Like it's hard to get a job, but you can always start another hedge fund. So glad we'll experience it all together. Do I need to change this? Maybe. Can you speculate on the volume and price spike with Corsair? Yeah, I know it ran this week. There was a bunch of like gain porn. No. I mean, was there some kind of, there could have been some kind of news. I'm not, oh wait, this is not Corsair. This is Corsair. Okay. I'm not really sure. Check out the 4 hour. It's like a pump and dump. Maybe a short squeeze. Maybe there was like a small short position on it. It definitely went up a lot. Look at the here. It's had spikes like this in the past. Hard to say. I don't know enough about the company. If there was like some sort of news that triggered this, or if it's just like another Wall Street bets pump and dump. But it may overcorrect. It may hold just stable at 30 again though. I would look for it to drop below that support there and see if it overcorrects. There may be like a good dip buy opportunity or an opportunity to buy puts if that continues to dump on Monday. I don't really know how they're valued either. I mean, like, I guess they're a tech stock, but they're also like a manufacturer. Greg, in your most professional, non-financial advice, what are your thoughts on GME with the Russell 1000 debunking or upholding the talk about a share recall, etc.? So a lot of GME shares that are in ETFs are held by BlackRock and Vanguard. And their cost basis for their shares is like $5 to $8 a share, right? So they're gonna just move those in block orders off lit exchanges to their other ETFs, right? So they're gonna move them from one ETF to a new one. Kind of like a transfer. So I don't think we'll be seeing a lot from them. The other ETFs like iShares and stuff that hold GME, they're super short, right? All their available shares to borrow are like eaten up. So they're going to have to recall those shares in order to sell. So we'll get a price spike from the recall. And then we'll get a dip from the sell. And then the buyback will get... iShares might transfer also. There's a few that will do this, though. The sell, and then we'll get a spike from the buyback, I think. And then, depending on 005, we may not see a dip again. They may not short this another time. Also, it's possible that some of those ETFs bought during the at the money offering, right? In order to kind of get ahead of the curve. Because the position is relatively smaller, there is often net selling. Okay, so GME's position, and I kind of covered this on stream, but when GME was weighted into the Russell 2000, it was on the low end. Not have a high market cap in the Russell 2000. So this was GME. Moving into the Russell 1000, it's actually weighted more heavily. GME's around the midpoint, weighted at 11.97 billion. You can look up what their what it was in June of last year, their market cap, but I'm not sure. It was low, I know that. Like the high end is really high, but GME's better weighted in the Russell 1000. Like it's better positioned than it was in the Russell 2000. So I actually think the more shares of it are going to be purchased than sold. But even if it's a net sell, you're also going to have like institutional buyers moving in because of the move to the Russell 1000. Like there's other factors, right? So like I know those news articles are talking about how like, 5 million shares are going to be sold, but there's a very good chance that like far more shares will be bought, right? Like if you go back and look at some other Russell 1000 inclusions, it's generally a net benefit to the underlying. It does experience a period of volatility that can be quite extreme, but it ultimately usually is a net benefit. Unless they've moved from like very high in the 2000 Russell 2000 to very low in the Russell 1000. Kenny Boy sold one of his penthouses at a 23% loss. I don't know. His personal money has fucking nothing to do with Citadel for the most part, right? Good investors don't invest their own money. I mean, they do, but like they play with other people's money, not their own. If that makes sense. So what he's doing with his real estate and shit is not really relevant to anything going on with us. He's not like selling his penthouse to prop up Citadel. No news. Wall Street bets pumping up. Probably. There's been a lot of those lately. I do caution you guys that they are very dangerous. Careful with, if you do play them, make sure that you are in and out quickly. Do not end up a fucking bag holder, right? Because then you're just giving money to fucking other Redditors on Wall Street bets. You were the person they're scamming if you end up a bag holder in those situations. That's after hours? What's after hours, Chris? I don't know what you mean. What happened in after hours? Corsair's like fancy Logitech. I mean, I know what they are. Like I know what they do. But I don't really know how like they're valued. I'd have to do a deeper dig into like the computer accessory manufacturers. It's like a very like fringe market. Do you think the divergence of GME AMC to Russell 1000 2000 would make AMC less operative as a distraction tool? I mean, no, not as long as the mainstream media's attention is focused on AMC. AMC is absolutely a distraction. It doesn't carry any of the weight for a short squeeze the way GME does. Like, none of the fundamentals are there. I don't care what fucking Cornub writes in his what is essentially his own AMC Discord over there, but it's not a good play. It's not safe. I'll never recommend it to anybody. Is there money to be made there? Yeah, but you're just stealing that money from other retail investors. So you have to be okay with that. I am. I don't give a shit. If you're stupid enough to buy AMC, then you deserve to lose your money. But when it comes down, it will come down fast and hard. I don't know how high it'll hit. It could go up from where it is now. It may not. But as long as media keeps the attention focused on it, like I would be highly suspicious of it. Corsair, GameStop, not confirmed to be a thing. Yeah, I mean, a lot of people sell Corsair products, so that doesn't balancing have an effect on the price before the 25th. Probably before and after, Tarek. At least from the historical editions that I've looked into, it looks like before and after the rebalancing date are very voluminous and volatile times. But we like volume, right? Because everyone buys and holds, so volume always pushes us up, inevitably. They have a time frame on O5, or can they just let it sit forever? No idea. But 005's not the SEC, it's the DTCC. And then 002 is the NSCC. Both of those are SROs. So the way they implement their rules is up to them and their own internal system. I'm sure they'll implement them in whatever way benefits them and their members the most. They're they might be trying to protect their other members from bad actors. So they do have an advantage. Like they do have a reason, or at least a motive, to move against companies that are like short GME, like Susquehanna, Citadel, Melvin Capital. But like it's not necessary that, like, not necessarily, right? I found a WeBull GUI. There's going to be a few, dude. It's still pretty new software. There's a lot of annoying shit, but they all have that. Every trading platform I've used has some weird fucking GUI or like user interface hiccup that I can't stand. I've yet to find one that doesn't. 720 market cap, 0.28 billion, 620. Yeah, there you go. So like that's how it was ranked super fucking low in the Russell 2000, like near the bottom. And in the Russell 1000 it's actually like ranked really high, so didn't Tesla have some serious upside not long after they rebalanced as well? Oh yeah. Like very a lot of growth occurred after the rebalancing. Never invest your own money. It's a funny line in The Producers. Yeah. It was a great movie. Both the original and the remake with Nathan Lane. Corsair spike was in After Hours? That's weird. Someone bought a bunch. How? Really? I don't think so. All of it? Or did it just tank on market open? Hold on. I mean, no. Some of it was in After Hours. It was actually not After Hours. It was pre-market. Right? Pre-market leading into the day with its peak around midday, and then it came down. But if you look the volume on it, so like a lot of the price increase was on like almost no volume, right? But the volume on the spike was all traded during the day, not in After Hours. There's nothing suspicious about that. It went up like $4 in pre-market. I'm lagging way behind on the stream. Speed it up. I mean, wild, yeah, but like still really low volume. If this is like about like a concern with MOASS and After Hours, don't be. Like market participation will be higher, right? Because interest is higher in After Hours, but it'll still be too low for anything like effective change to happen. I'm probably just behind on the comment feed. Probably. I mean, they made a shitload of money during the pandemic because everyone gobbled up all the available computer parts because everyone was stuck at home, right? Like so many people moved from like laptops back to desktops. Because if you're working from home, like you'd rather have the computing power and like a big setup. for a large part of the pandemic, like PC components were sold out everywhere. Yeah, there might be a good growth company. I don't really know much about their value or their corporate setup or leadership or anything like that. So I don't want to comment on if they're like a good long term play. They might be. I don't know if it doesn't go into effect until it has a Fed filing. I don't know. The Fed will report it once it's filed. The time frame, I have no idea. I feel like somebody who cares about these things might have a better idea, but I'm not really. I don't understand why anybody trusts SROs to all of a sudden follow up on the rule changes. Like, they would still have to enforce those. Please show your vape level is set at. So you can set your nicotine levels on them. Throwaway question. Oh, I think this. You can't set the vape, like the nicotine levels on them, but you can buy lower amounts of nicotine smox. I think mine's at like 20 milligrams for salts, which is like the equivalent of like 3 for the other one. I feel like when your Kirkin reads your comment at 10:13. Well, dude, I try to get to everybody on the member stream. So if you drop a question, expect a delay in the answer. What's up, Mac? All right, so let's look at some other stuff since I think I'm all caught up on the questions for now. Let us take a look at this. So this is our cup and handle that we were looking at last week. We could trade sideways a little longer, but I expect that we'll see a breakout soon on this. If it plays out. Yeah, no problem. But it looks good. Resistance line's in a good spot. So we're looking for a break upwards above like $305. I guess actually hold on. I guess that top line could be a little more accurate. So a break above 307 would indicate that this is breaking to the upside. There is confirm the accuracy of the indicator. TTM looks like it's moving into another fire range. Bollingers are back inside the Keltner again, so we're looking at like the BBKC squeeze signal. 3 days. We'd like to see. Remember, like we'd like to see. If you guys have been following along with this DD for a long time, we want to see 5. So we're going to see 2 more before a break. At least. No, the handle's fine. I don't see any flaw with the handle. I mean, I think like it formed a little unnaturally because of the sell-off. So I think it should have formed like more like that. But I think the sell-off like pushed this down. Right, so the sell-off created a deviation in what would have been like a much smoother looking handle. But that doesn't affect the reliability of it, I don't think. Like we may still see some more down towards like 200-ish. But still it looks fine. This is another way that like the sell-off is kind of indicated. here, and then also here. If you look, we had a lot of arbitrage during that period, and that also was another big indicator of the sell-off occurring. What date for MOASS? Who knows? Yeah, it needs to hold above 305. It doesn't really affect the reliability of it, right? It can delay it. So like just the same way an upward move can accelerate a pattern like this. Hold on, I gotta fucking close Epic Pen and reopen it, or it's gonna crash everything again. No. Bing. So just the same way an upward move can accelerate a pattern, a downward move can slow it down or decelerate. So while we might have completed the handle already, right? That downward force from the sell-off could possibly extend the handle, right? And then we'll complete it at a slightly later date. But if there'd been like a ton of buying pressure, like here, right? Like say we could have broken out earlier too. What's your primary indicators for a market crash? Point of no return. So let me bring WeBull back up and I will show you. So I'm going to be looking at two things, right? I'm going to be looking for a crossover on the daily of this lower resistance, which we're very close to, right? A crossover of this trend line. Now we could bounce here and come back up, but I'm looking for a crossover here. And that's going to be like my first confirmation. At which point I will probably confirmation. My spelling is atrocious today for some reason. Confirm. And then I will be looking for on the so we already I have this confirmation here on the MACD indicating a bearish crossover. So this is a bearish crossover signal on the daily. We're looking at a possible crossover on this support. So this would be my second one. And then lastly, I will be on the 4-hour looking for a crossover of the 50-day moving average with the 200-day moving average. So I'll be looking for this to dip below that. Or that'll just trade sideways. And that'll be my third. And that can happen on Monday. But if all three of those are confirmed, I'll be increasing my short position on the markets. I know this is a GME like stream and the things we do are about GME, but you can't blatantly ignore the market. I know a lot of posts right now, especially on Superstonk, are like telling people, "Oh, ignore the market. It doesn't matter. It matters. It matters a lot." It's like you break down CVVWAP. Is it technically significance? on TradingView for those who are familiar looking at squeeze signals. Yeah, I mean, CVVWAP, I don't know that much about, right? This is like a custom designed indicator based on the Volkswagen squeeze, right? But essentially what you see here is these outer signal lines indicate, like here and here and here, these outer signal lines indicate a divergence between the US dollar and euro on GME. And so if, say, on like the French or German market, the GME is trading at like $240 and GME is trading at $220 on the US market, right? We have a lot of arbitrage between these two prices, right? This is arbitrage. Euro. And we'll see. Oh wait, I have to change this. Hold on, so you guys can see where I was signaling on the TTM. Oh, you can't because my fucking head's in the way. All right, hold on. Let me go back to WeBull so you can see better, and then I'll show you on the chart. And so eventually, like in aftermarket or pre-market, these prices, arbitrage will occur, and these prices will meet somewhere in the middle at like 230, right? So there comes a moment in time where if you bought GME on the US market, it would be in fact worth more. If you bought it on the European market, it would in fact be worth less than what you paid for it. And that arbitrage will occur. And during those periods of arbitrage, a signal is thrown that this indicator picks up. And that signal looks kind of like this. If we could zoom in a bunch, we'll see like as it moves to the outer and even further out, hold on, test lines. These are the signal lines for the, why is it doing that? There we go. So these are the signal lines. And basically what we're looking for is it to touch the outer signal line. So the arbitrage difference is great enough that it throws a hard enough signal for it to test the outer signal line, and then that would imply that a squeeze is imminent. So while we've had some volatility in this recently, it has calmed down in about the last week. The last signal we got was right before our last run up. But this also coincided with a holiday, so it may have been a false signal. So if the European markets are closed and the US markets are open, it's possible that a false signal got thrown. But before that, the last one we had was in March, I think. Was it March? Hold on, let me double check that. I think it was before the run up in March. Yeah, here. As you can see, there was a significant amount of arbitrage there that occurred. That's it. Not much else to say about that. But there's probably better ways to use that indicator than I do. There's a lot of missing information in regards to like best use and stuff, but waiting on the limited edition Dillionaire's members only jacket. I'll work on it. Had a heated debate on whether Jurassic Park is a feel-good movie, since it's too intense to feel good. It's hard to say, right? Like Spielberg's movies are always like kind of follow that same thing, like lots of trouble and issues, but then happy ending. probably somewhere in between the two. I think ultimately it's supposed to be like a feel-good movie, but a lot of bad shit has to happen to get to that point. Wait, yeah, I fixed that. Saving Private Ryan is a feel-good movie. Ultimately, right? What time frames do you expect to make the most of your MOASS decisions on? Signals on shorter time frames. I would be checking. So I'm going to be during MOASS. I'm going to be watching the 1 minute, right? And then I am going to alternate that by checking indicators on the 5, right? But I'm not going to probably stray away from those two time frames. I might use 1 tick to confirm like volume change trends and to determine the peak, but most likely just 1 in 5. Yeah, absolutely, Armin. We got about 19 more minutes, so if any other questions that you guys want answered, let me know, and I'll try to get to all of them before the stream is over. You think AMC will MOASS before GME? I don't think AMC will MOASS in the context that everyone's thinking about. I think AMC maybe could, if it can get past 75, which doesn't seem likely at this point, it might be able to hit 100 a share. But it's pretty speculative. It could run higher in the event that like positions that are short on both collapse. But I don't know. The paper handing over there is unreal. Like, it is not a well-informed community. They don't know shit about stocks. It's a big mess. Price prediction end of week. I'd like to see us returning to like the 300 range by the end of this week, but it's hard to say. The volatility is going to be very high this week. I think AMC, yeah, I think AMC might be close to done. I mean, I have puts on it right now at the $60 range that expire on the 16th. I still have 2 left. I sold 8 this week when it was like right around $50. I bought 10 total. So we'll see. I might be picking up some more puts on it. I really don't have a lot of faith in it running. I paper-handed AMC. A lot of people paper-handed AMC, and that's kind of the problem with AMC. The float's so big, retail absolutely doesn't own all of it. I think most of the price that you see on it is propped up by retail. So all the money being made over there is just retail making money on retail. How do I determine historical prices on SPXS? Going back to 2009, where it had a 1-5 split and another 1-5 split. Why do you need to determine historical prices on the SPXX? I think you're digging a little too deep into these inverse plays, some of you guys. These are not like a stock that are tracked by like technical indicators or anything. They're not like value investments. There's no research to be done. They're simply an inverse play to the market. So I don't know what you're trying to get out of it by looking at its historical price range. You can look at growth. Like the growth in the underlying is not going to change. Like if you're going to try to see what it can hit. because each share still moves at 3 times the inverse, right? So the rate of growth in the event of a crash is going to be the same. So you could just take the growth percentage out of the equation would be the best bet. Don't worry about the fundamentals of the underlying. There's you're not going to get anything out of it. A lot of brokers will recommend that you don't even use inverses like the way I do. Determine option out of the money calls to buy. Nice, thanks. Yeah, I mean, just in the last crash in March 2020, there was like 100 and some odd percent growth per share. So you can pretty much determine that a crash now or a greater crash would affect a greater growth percentage. So you figure if it's trading at 26, it could get above 50, 60. If the crash is more severe than March of last year, then it could go even higher. But 50, if you're buying $50 SPXS, you're at the $50 strike. This is a crash you're betting on, right? Like no other event will facilitate these going into the money. You could pick up money on the IV, right? Briefly, there'll be a brief period where the IV generates a profit on these calls, even during a correction. But these are a bet on a crash at $30 to $35. You're protecting against a correction. And then, yeah, I mean, if a crash occurs, like, and you have a $30, $35 call, obviously, you're going to make a lot more money than off a $50 one. But either way, if 50s print, you're going to make quite a bit. Liquidity can end up being an issue on some of those, though, so be careful with that. Don't overhold when the market recovers, it can recover quickly. That's why most brokerages recommend against them, is because when they move fast, and their IV spikes. When it looks like the market's recovering, the assumption is that it will, and then the IV can drop the IV can crush really fast. Super volatile. VIX plays are also super volatile. Be warned. These are like investments that you cannot look at the end of the day. And this is why they're not recommended for all traders, as their levels of extreme volatility present a lot of risk. You can't check these after work. You have to be on top of them the whole time in order to maximize profits. Oh, no worries, Dr. K. What profit percentage do you usually consider meeting your goal on an option play? It varies. On day trades, 10 to 20% for an option play. If it's a swing, I may aim higher. It depends what I'm expecting. If I'm playing a wedge or a resistance bounce, I will play the upper resistance, not percent gains, right? If a stock's trending to a low resistance and I expect a bounce, then I'll be playing the upper resistance either for a crossover, which I'll watch for, or if it fails, then I'll sell, right? But if it crosses over, I'll hold and attempt to maximize gains there. But there's really a lot of variables in that KO. Options are complicated, or they're simple. It depends on how you use them. You can buy something I might look into doing on Monday is getting a spread on the SPXS. So I'll buy a 30. I'll buy 30s, 35s, 40s, and 50s. And then if it looks like a correction, I'll sell these for their spiked IV. And then I'll hold these for profit. But and then if it looks like a crash, I could just hold all of them and maximize profits that way. Oh, shit, Ryan. Do you have that link? If you can send it to me on Discord, I'll share it with the chat. How likely would you say a crash occurs versus a correction? Correction occurs, would you still expect a crash in the near future? I think a correction is far more likely. But yeah, if we only got a correction, that would delay a crash pretty significantly. So I wouldn't expect it in the near future, but I still expect a crash like within the next year. Possibly a very deep winter correction. So every winter on the markets, you get like a big correction. Sometime between like November and February usually, but it's happened later, it's happened earlier. But I would expect that the next correction would be very, very severe. But this, I mean, this is really starting to look like a crash. We'll see. Sorry for dropping in chat, breaking all the rules. But no, I mean, you can, if you send it to me on the Discord, I'll share it with everyone. It's just you can't share links on the Discord. So when retail goes in hot, heat black, rock, that would correct then. Wait, what? Cool Daddy? You're typing on your phone again, man. Yeah, I know. If someone has a link that they want me to share with chat, send it to me on Discord, and then I will share it with the YouTube chat. I can share links with the YouTube chat. Handbanan and Secure can share links with the YouTube chat. None of the rest of you can. Retail businesses go in the black in November. Yeah, that's. I mean, yeah, it's usually sometime between like the quarter ending and the next quarter, like the second to last quarter and the last quarter of the year being reported, is usually when the big like yearly correction happens. A lot of people try to play it, but yeah, it's hard and expensive. And it doesn't always happen on time, right? Like I've seen people like miss it by a month, even though they played super far out. We are peasants. Not peasants, just yeah, not allowed to do that. Thank you all so much for any of you that also like go around on Reddit, like promoting the stream or promoting the live charting. That's super cool, you guys. I know some of you in the chat right now do that pretty regularly. It's super awesome. Thank you guys for that like level of support to like go out and do that. It's really cool. I'm just extra cool. 54. A few more minutes. Any more questions, guys? Anything else? I think we've covered most things. Commented sperm on the daily. No one knows what that means. Weekend plans. I want to get my hair cut. Probably get something to eat. I have some shopping, like shit I have to pick up. I have to like go to like Target or something. I want to moon this week. Yeah, we all do, man. Sent to Discord. Oh, okay. Let me yeah, oh yeah, this one. Here. Yeah, this is a good one for WeBull. It's a good one in general. He covers all the option stuff, even without, you know, the walkthrough of the WeBull interface. I got 3 updates. One of them was probably from me. Usually if you guys like tag me on Reddit, I'll like upvote it. If anybody needs more karma. Reddit assigned me the worst username. Chocolate present. I'm pretty hyped for this week. All right. Thank you guys so much for tuning in. I'll be having the DD come out. I want to edit some videos tonight, so I'll try to get those up. And then I'll also have, you know, the DD and everything coming out tomorrow throughout the day. I might have 2 DDs that I'm writing. I'm kind of thinking about it. Thank you guys so much for tuning in. I'm glad to have you all in here, and I guess I'll see you all like Monday. Absolutely. Thank you guys so much. Have a good one. Ending the stream a little early. I don't like that. All right, that's fine. No more questions? Really? We got 3 minutes. See you on MOASS Monday. All right. I'll close it up. Later, guys. Have a good weekend. Thank you so much.